And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to this week's Wealth Within School for Startups Radio Market Update. My name again is Jim Beach, and I am with Dale Gillham at always. You can find out more about him at wealthwithin.us. Dale, welcome. Good to see you. I know you had a busy Valentine's weekend and are a little tired. How did the market do with you taking the day off? Did they close the markets when you don't work?
No, it's actually been very good. I mean, the S&P and the Dow were both up last week, only at 1 to 2%, but not huge, but still a good move, and both are looking good. But when you look at the Dow and the S&P, the Dow closed down a little bit, where the S&P closed right up on its high, which is a little bit stronger, and that might be because of all the tech stocks. You know, you're looking at Microsoft still powering on, your Apples and some of those other tech stocks are doing quite well. Obviously with the Dow's got a little bit less of those tech stocks in it, but both looking strong at this point in time, and looking like they're going to keep moving on. So I'm really excited about the market. But at the moment, there's a volatility index, which is called the VIX, so VIX for the VIX, Volatility Index. And what we're looking at here is the volatility, or 30-day expected volatility of the market. Currently, the VIX is around 12.3, and it will often move to around about 20% in a market decline. So it's pretty low at the moment. So the chances of a market decline right now are not high. It's more bullish at this point in time, but we do expect more volatility in the US market, but I really do think it will continue to rise. And as we find a little bit more about the impact of the coronavirus, which I might think, to me, that's just a speed hump in the road, the coronavirus, but it just depends, because obviously China is producing a lot of goods that the rest of the world buys, and obviously it takes a lot of goods from the rest of the world. But we need to look at that in terms of a short-term speed hump. It won't turn the S&P 500 or the Dow. It won't crash the markets at the moment, but you know, the S&P 500 is up about 4.6 for the month of February, so you've got to think that's pretty good.
Well, let's go back to the corona in just a second. I want to follow up with the VIX. So right now you said that it's at 12.3. Are we expecting it to go up over the course of the year, or why are we watching this right now? What action are we expecting?
Yeah, it will move up and down during the year depending on what's going on and reporting season. Generally, you'll start to see it rise a little bit more in reporting season, but it's a bit low at the moment because reporting season is not, I won't say it's been a non-event, but as we talked about 75% of the companies are reporting better than expected earnings. So there's been no real huge surprises. So when you start getting some more surprises, the volatility index will go. And this is where I might expect it in that second or third quarter, because I know we've chatted before about the economic growth in the US and how we're all-time, or pretty close to all-time lowest unemployment figures, or unemployment figures not seen in 50 years. So as we start seeing phase one of the US-China deal really embed and we get over this coronavirus, I'd expect a lot more, better figures from the US. And I think the US, the GDP growth for the US over this coming next 1 to 3 years, I think is going to be around about 3.5% from memory, so which has been
if
better
we're
than
lucky.
what it has been.
I don't know that it will be that high. That would be really good. So.
That would be really good. So that might cause a little bit more volatility. As I was saying, maybe in that second or third quarter this year, we might start seeing that move, and then the volatility index might peak up. But it's a nice little indicator where the market is. But quite often, Janine and I will actually look at that as analysts and go, yep, we want the volatility there. And if it's bullish volatility, that's where you really want to get behind some stocks.
All right. So we mentioned Corona. Let's talk about that a little bit more. The numbers keep changing every day. The standards that China is using to report have been changed. We're starting to see articles here in the United States about the supply chain being interrupted. how concerned are you about this from a black swan type event?
I'm not super concerned about it because obviously I think we touched on this last week. It just depends on how much supply was already there. I mean, obviously in more modern times we're in just-in-time delivery. A lot of manufacturers are like that. They only don't have stock there. But it just depends on how much was sitting around, I suppose, from that point of view on a lot of the goods and service or goods that we take from China. But there is a lot of places around China that are closed at this point in time. I think the Chinese government have done really fantastic in trying to contain the virus. I know there's not a lot of cases in Australia. There's only a few in Australia. The rest of the world has been doing their job as well. But as far as figures from China, it's always hard to get reliable figures out of China. It's one of those countries that it is a communist country. It is a big consumer. It's growing really, really fast, but it's just so hard to get accurate figures on it. But I'd say if the coronavirus goes on for another 30 or 40 days, then it's going to start to have a much bigger impact. But I still think within the next 3 to 4 months, if that threat of the coronavirus drops right away, I think we'll get back to normal. That's why I'm saying it's going to be a speed hump more so than something that's going to turn the market. So it might slow it down. And I know a couple of weeks ago I said in our first interview for this year, I said, the S&P 500 did 25 or 26% last year. It's not going to do it this year. It's going to be slower. And this coronavirus might be the catalyst for it to be a bit of a slower growth, not negative, positive growth. I'm still positive. I'm still bullish for the next year, but not as good as what it was last year.
Let's move on and talk about Nike. Big news for them for the week. Involving a little bit of court trials with Michael Avenatti, but also the stock had a great week. What did you see with Nike?
Yeah, it achieved an all-time high of $105.62 on the 22nd of January, but it did fall around 9% to the end of that month. But since then, they've risen right back up to 103.54 on Friday to recover most of the losses that it had. So it was up about 4.35% last week. So it was a good week. So it's a stock that I say to people to watch, because I'm actually going to look at the chart once we finish chatting. I'm going to have a look at the Dow, but I'm going to look at Nike to show everybody what I'm thinking there on that. But it does look really good. But it was the biggest mover in the Dow last week. Now, the Dow has, as I said, the tech stocks are looking good, like your Microsofts and your Apples still. But I think from a retail perspective, retail's not super strong still in the US, but Nike's doing quite well. And it doesn't report its earnings for another 4 weeks. I think it's the 19th of March that it's actually doing it. So this court case with Michael Avenatti's not really slowing it down.
What a moron he is. Just a train wreck of a person. And he has 2 more trials still to go. He's going to be in jail forever. This is the last time humans will speak of him, I think. But Nike is, I think, a really important indicator for the larger issue of consumerism in the United States. So if Nike is having such a great run, that speaks very highly of the 70% of the economy that is consumer based. It looks like us American consumers are still doing our part, Dale. We're still spending money like drunken Nike runners.
Yeah, absolutely. Nike is the big brand, isn't it? If Nike's doing well, you'd think the consumer market is doing well. And obviously, if the big end of town who purchased the most amount of shares or the most volume goes through on stocks by the big end of town, if they're still supporting Nike, then hey, I think the sky's looking really, really good. Obviously, with low unemployment, productivity up, all of those other things. As also I'm saying, I think the second half of this year, we're going to start to see a much better figures from consumer spending, etc. I mean, oil's still reasonably low. The US dollar's still looking really, really good at this point in time against a lot of other currencies. Although that said, more medium term, I think the US dollar's going to come down a little bit, which is what governments like. They don't like to have it too high because that will stop or slows down exporting, and I'm sure Trump wants to export more. But Right now, Nike's looking really good. Consumer spending, while still subdued, I think it's only up very like less than 0.5%, but you probably call it flat consumer spending. So as the market runs on confidence, I suppose that's what I'm trying to say, is if everybody's confident that they've got a safe job, they've got money coming in, they're happier, they go and spend more. And I think we're going to see that over the next 1 to 2 years.
Well, another thing too, we jokingly refer to it as a tax cut, but the gasoline tax is falling and gasoline prices falling so much, with prices now almost at the $2 mark in about half of the states, that we consumers are getting a huge gasoline dividend and getting a cost of living increase because our gasoline prices are so low. So I think the consumerism will increase over the summer as we have very low gas prices, with consumers paying $2 and a little bit instead of $4 and a lot for gas. Travel will do well. It's good for all of us.
Yeah, absolutely. And fuel prices are one of those metrics that they do put into, that consumer confidence. So, if people can get in their car and go for a drive, take the kids to a theme park, whatever that is, that's, where I'm super, super jealous of you on your fuel prices. Ours are at least double what yours are. Ours are heavily taxed by our government. I think more than 60% of the price of our fuel is government taxes. So they make a fortune out of us. So, we got to take a small mortgage out to go from Melbourne to Sydney just to pay for the fuel. But if your fuel prices are low, then it does really encourage people travel, a whole range of other things. Everybody's a little bit happier because they see that on a regular basis. And that's the important thing, is they see that it's only $20 instead of $40, and they go, I've got another $20, so I can buy the kids something new, or I can do something else with the kids, or whatever we're going to do. But it does add to that happiness factor, and if we're happy, we're spending more.
That's right. Our time is just about up. Dale, what do you see for next week in the markets?
Look, I'm pretty confident the Dow and the S&P will rise up for another 2, probably 3 weeks, right up into sort of mid-March. I'm looking for a yearly high. That's really what I'm looking for at the moment for the market. I think it's still going to go up, as I said, for 2 to 3 more weeks at least before we see the next shorter-term high. But if we might even see the yearly high into April or May. But right now, I'm betting it's probably going to be March. But again, bullish. I like it right now.
Well, Dale, thank you so much. Thanks for the optimism. We love that. As always, you can find out more about Dale at wealthwithin.us. Dale Gillham, thank you so much, and we will talk to you again next week.
Thanks, Jim.
Go get some rest. No more booze cruising for you. And we will be back next week with more Wealth Within updates. Until then, thanks a lot.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as I said to Jim, I'm quite positive on the market. I'm going to go and have a look at the Nike stocks there. But first, let's go and have a look at a chart of the Dow Jones and really see what is happening on the US market right now. So on your screen now, I do have a weekly chart of the Dow Jones, and you can see here what I was talking about. And we'll show you a chart of the S&P, but the Dow just came back to sort of that momentum line that I've drawn here months and months ago. So you can just see how it came back through that down into January, and since then it's been bullish. Little bit sort of a slowish bar here. It just came right off the top to close just above the previous close from January. And you can see this is the highest close that the Dow has made, ever. It's its highest close ever, but it is looking quite good. But if I compare that with the S&P, which should be the next one, you can see the S&P again, same thing, came back to that momentum. But look at the close on that right up the top of the bar. And if I extend that out, you'll see that. So it's a little bit of a stronger move here. and a bit of a stronger move here. Now that could be because of the tech stocks. Remember the tech stocks in the S&P 500. Tech stocks make up around about 22 to 25% of the S&P 500, so they are driving it at the moment. But I want to go and look at the Dow again. But what I'm going to show you now is I'll get the Dow stocks up so you can have a bit of a look at that and see what I'm talking about here. So here's the Dow stocks. If I bring that up, and you'll see that. You can see what Microsoft's been doing. So that's this year, since 1 January. Microsoft's driving up, IBM, Intel, 3 techie stocks, they're all up over 12%. And obviously Microsoft up 17%. Home Depot coming in there at 12%, and Visa and Apple over 10%, then McDonald's. But if you look at where we're talking about, where was Nike? Nike's about midstream here, up about 2.2%. For the year so far, even though it rose very, very strongly last week. And down the bottom of the list is Dow, DuPont, ExxonMobil, Walgreens and Merck, all that down there, and JP Morgan Chase. But Cisco is also down around about -2%. But it is looking good at the moment. As I said, the tech stocks are there. Apple's looking good. Microsoft's looking good. Some of the other ones, the chip manufacturers like your Qualcomms, I still like those stocks. But let's now go and look at some questions. And as I said, we'll also bring up Nike and have a look at their stock and all their chart. And we'll determine where they're going to go over the short term and the medium term for you. Right, now the questions, I've got a couple of questions today, but the first question we have today is from Cad, who says, "Hey Dale, Neil from Sydney, how much is there a difference between, how much difference is there between your Australian version of your book and the American or the US version of the book?" Basically, there's a few little differences. It's got US English in that. That's one of the first differences. The second one is I use the Dow stocks in the US book, whereas in the Australian book I use the top 20 stocks on the Australian market. So I've used all 30 stocks in the Dow on the US one, and just minor things around taxes and a few other things that are a little bit more localized to the US market. But generally the content, how I'm trading, what I'm trading, how I'm talking about trading and investing is exactly the same. The US one is available on Amazon. It's just got green writing on the front cover where the Australian one doesn't, so you get the Kindle book or the ebook off Amazon. You can do that, and it's also in bookshops around the US. You can't find the physical book in Australia. You can't buy that one. You can't buy the physical US book in Australia. If you go to a bookshop here in Australia, then you'll be buying the Australian one. But get your copy because you'll get the same learning. That's pretty much. And some people have bought both so they can see what I've done on those US stocks. But the next question we've got is from Riley, who says, "Hi Dale, I think I was the first person to ask your opinion on Tesla on this show just before the steep bull run that pushed Tesla up past $900. Mate, I've been looking at Tesla for so long with Jim Beach and others, so I doubt we're the first person that ever brought it up with me, but it's also relevant. That's fine. But he said, "I bought at $259 in October 2019. So I've just executed my exits strategy today, which was Valentine's Day on the 14th at 760. About 191% gain over 4 months isn't too bad. That's absolutely phenomenal, brilliant. It's not necessarily repeatable all the time, but it's great when you get it. The last time you mentioned I'm an Aussie investor. I need to keep an eye on the US Aussie dollar exchange rate. At the moment it's okay, but thank you for making me extra aware of how quickly a fall in the exchange rate can chew my profits. It can do that while the US market or the US dollar is strong at the moment against the Aussie dollar. I am thinking it's going to change. He said, "I plan to exit my international account when I notice the start of a downtrend in the US dollar." 2 questions if I'm allowed. Yeah, matey. Am I expecting to see the US dollar start a downtrend mid this or early next year? What's your view towards this? I'm not exactly sure when it's going to start, but I am expecting the US dollar to start having weakness. As I mentioned with Jim a little bit earlier, I think it's going to fall away against some other major currencies, especially with the Australian dollar against the US dollar. The Australian dollar is quite low against the US dollar at this point in time. For the Aussie dollar to rise up against the US dollar, we do need to see things like our material sector do really, really well. We'll need iron ore to start moving up because obviously iron ore is traded in US dollars. It's about how many people are buying Aussie dollars and what US dollars are coming into Australia, etc., to balance all of that out at the moment. But really at this point in time, the US dollar is stronger. If you've got US dollars at the moment, I wouldn't be cashing them for Australian dollars at this point in time. It's just really what your opinion is. But at this time, it's only time will tell, but it won't be too far away, if that's what I'm suggesting here. So I'm going to have a look at Tesla for you as well, because as you did mention that. The second question that you do have is I'm interested in GE, General Electric. I think the bear run has finally found its floor to rest on and showing some good support for a bull run. Your thoughts? I did look at GE not too long ago, actually, one of my reports, and I looked at GM as well, General Motors, and that's looking a little bit better. But let's have a look at GE. So let's get on to the charts. Actually, no, we'll go to Tesla first, and you can see here the run here that this stock had. And if I go to the monthly chart here on the right, you can see if I do here, where's my little tool? There it is. Looking at sort of, there's November, so here's sort of October-ish. No, where's that? Is that October? That's August, September, October. There, that's the sort of run that we're talking about. There was 332%. So obviously you've got in a little bit later in one of those other bars, but right now it's still up 256%. And a lot of people leave money on the table because they're afraid of losing profits. I think that's what you've done. I'm not sure what your rules are for this stock, but because if I go to the weekly chart, there's zero reasons why I would sell this stock right now. I'd still be holding that if I had a position like yours. I still would have been in that stock. I think your entry was probably maybe a little bit late, but it was still very, very good nonetheless. But right now, I think your exit is way too early. Whilst I've saying with Jim the last few weeks, I do think the bull run with Tesla will slowly come to an end. It hasn't told us that it's finished, and that's one of the things that separates traders rather than speculators. And there's a real difference between a real trader or what somebody I would call a real trader and somebody speculates a lot more. Real traders only trade on confirmation of a move, not speculation of a move. And right now, this one hasn't given me any confirmation of a move down, so that's why I would have stayed with it, because you may be giving you a haircut on some great profits, but whilst you did make good profits, it's also about trading well. That's one thing I talk about traders all the time, and I have people that I mentor in trading, and they say, hey, I made money on this, and I went, yeah, but you broke your rules, so don't think that that was a good trade. That's a bad trade. And then other times they'll ring me and say, hey, I lost money on this because I did this, this, and this, followed my trading plan. I say, well, that's a great trade. Even though you lost money, it's still a great trade if you follow your trading plan. So there's where to me, it's about trading well. If you trade well, statistics will tell you that you'll make money over a period of time, but right now I think you've just given yourself a haircut on this one, because I can't see any reason on the Tesla chart why you wouldn't continue to hold this at the particular time. Now let's go and have a look at GE. This is the other one you mentioned here, and as I said, I've been talking about this stock for a little while here because it did fall out of the Dow not too long ago. I think it was early last year it fell out of the Dow because it was bearish, and I've been saying this one's looking more longer term or medium term bullish for some time. So I do like this stock at this point in time. I do agree it is more medium to longer term, and it's one I've chatted with Jim about a few times. So whilst I don't think you said you've bought it, I do like it at this point in time. I don't have any issues with GE at this point in time, and GM is the other one I do like at the moment. Outside the Qualcomms and some of those chip manufacturers, I do like those still. But it is looking good. A little bit of indecision more recently, and it could be finding some resistance in the not too distant future, but right now it does look like it's going up. GE. Now let's have a look at the next one here. This one is Nike, which I was talking to Jim about, and as I said, let's have a look at the monthly chart on here. And for some reason I don't have all my data, so let me download the history while I'm chatting to build that up so we can have a look at it. But Nike is just a beautiful trending stock, and we can see that after on the left hand side there, it's beautifully trending up. It's up around that, what you can see now I've got all my data, but if we scroll that up, you can see here this thing just keeps going, and that's why it's a real good economic indicator of what's going on in the US. It's quite nice and bullish. That our pullback right through here down into these sort of levels in 2016, but right now I think this stock is looking good. I think it will continue to rise up. I think as consumer confidence starts to rise in the US, it starts to get better. I'd like to see if it does break above that high there, that 105.42. I think this thing will keep going up. It's not too vertical at the moment, but I think it's probably got another 10-20% plus in it over the next 6 months, possibly even a little bit longer, but it's a nice looking stock at this point in time. But thank you for sending your questions in, guys. I think it's really, look, I do appreciate you sending your questions in regardless. I mean, obviously this is the US stock market report, so US stocks is the go on this one. If you've got questions on Australian stocks, put it on my Australian report. But thanks for sending your questions in and watching till the end of the video. I do appreciate that. Now, if you have any questions that you'd like me to answer, just stick them below in the chat and I'll get to answering them. Also, remember, if you've been watching from anywhere, US or anywhere around the world, please tell me where you're from. I always like to hear where people are from and who's watching my videos. Now remember, I do these reports every week, so hit the subscribe button there, click the bell on the right of it so you know when we go live with our latest stock market reports. But for now, I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.